Hey everyone, today we're going to talk about what are the owner-to-owner financing requirements. My name is Waleed Yousif with Sunbelt Cash Offer, and today we're going to talk about the requirements for buying owner-to-owner financing property, right? So just as there are for the bank when you go and apply for a loan, and there are requirements that just say a credit score, type of income, the down payments and monthly payments and all that. Requirement for traditional bank. There are also requirements when you buy an owner-to-owner financing property. So now you want to keep in mind something that it varies from owner to owner, right? So different owners could have different requirements. So what I'm going to share with you are the requirements that we're using, right, for our properties owner-to-owner financing. So before we really start with the requirements for owner-to-owner financing, I want to share with you now what is owner-to-owner financing. We did talk about a video about what is owner-to-owner financing. So basically is the owner-to-owner financing is that the person who is selling the property, aka the seller, is financing the purchase price for the buyer. Instead of going to the bank and applying for the loan and finance the purchase price, the seller finance the purchase price for the buyer. So basically what is owner-to-owner financing? Obviously I've done video, I'll link it in the description. You can definitely check it out and see. So for now, let's go to the requirement. Now, before we go over the requirements, as I said, this is just an average on owner-to-owner financing, and it's different from what the bank requirement is. So I just want you to know that these requirements are different from owner-to-owner and also are different from the bank financing. All right, so we'll talk about the first requirement, right? The down payment, right? So down payment, it's one of the most important part of the requirement to buy an owner-to-owner financing property, because that basically it recovers some of the repairs or some of the financing that was putting on the property. For example, we buy properties in as-is condition and we fix them up, let's just say, with the flooring, the doors, windows, paint, AC, roof that needs to be replaced. So we want to make sure that the property is livable, in livable condition, in good condition. So we would buy it in as-is, we would fix it up, bring it to current standard, and then basically we would sell it owner-to-owner financing, right? So what we would do, we would use the down payment to recover some of the fund that we spend on that property. So that's why the down payment is really important in the owner-to-owner financing. Number two, it's the monthly payment, right? Monthly payment is also another important part, right? Because this is the one that you'll be making payments every month, right? This is the one that you'll be maintaining the property. And this would include the principal, the interest, the taxes, insurance. If there's HOA, that would be included, or if there's any other escrow fees that would be included. So the other big requirement is the monthly payment, because that would be consistent. That's what makes you able to continue living in the property, maintain the property, and have the property. Now, another important requirement for owner-to-owner financing is the monthly income, right? So the monthly income that you can afford to make payments, the monthly payment for the owner-to-owner property. So you can afford that payment, you continue making payments for that property. So that is one of the also important requirement to buy owner financing property, because that would tell us that if you afford the monthly payment, or you can't afford the monthly payment for that specific property. We have the monthly payment for this one. Let's just say we have it for 1,600, right? And your monthly income is 4,000, right? So then basically, you would basically divide this divided by the monthly income. So you would see, we wanted to see that something between like 40 to 50%, right? So this would be like a 40%. So basically 40% of your monthly income is going toward the monthly payment, and the rest, this other 60%, is going to your car payments, to food, to other expense that you have. But 40% of it, it's a healthy way. It's a good measure that we can see to for the monthly income to make payments, to make monthly payments for owner-to-owner property. Also, another requirement would be some other terms that we will have. Let's just say that property include HOA, so we would have to make sure to maintain the HOA fees and HOA requirement. Other terms, let's just say the length of the note, the time of the note, the interest rate for it, escrow fees that will be included, as well as the insurance, the taxes. Obviously, when we start, let's just say we have the monthly payment as 1,600, right? And as you know, taxes and insurance could go up and could go down, and that obviously would be affected. Let's just say if you have exemption for property taxes, then basically that would go down, and if insurance go up, then obviously that will be affected and the payment would go up. So that's why we would want to check and see that your monthly income, it's healthy, that you can afford the monthly payment for that property. Because for example, if you have, let's just say your monthly income is 1,800 and the monthly payment is 1,600, there isn't a room, right? And possibly if anything could change, if the insurance went up or taxes went up, then basically you can't afford the monthly payment, and that would be an issue, and we're trying to avoid that to happen. So that's why we will have that healthy percentage. We will also have those other terms and for the owner-to-owner financing. Right? Now, another one is basic background check, right? So basically what we would do, we'll do just simple background check on the applicant who's applying for the owner-to-owner financing property, just like as you do for a rental property. It would be basic ones, so we know that we have good family that coming to that property. Obviously, those properties that we're selling, owner-to-owner properties, are in great neighborhood and good neighborhoods, so we want to make sure that we have good families in those neighborhoods as well. So we don't have issue with the neighbors, we don't have issue with, let's just say, HOA in the future. So we want to make sure that we put a good family and good neighborhood. And another one that we would check as a requirement is the type of income. So now we're very flexible on this one compared to the traditional bank financing. We understand there are people who are freelancer, Uber driver, like 1099 for that, and we do understand that, so we're a lot more flexible than the bank financing. So we just wanted to see, okay, what type of income for the income that you have, and that should be good. If you're doing Uber, if you're doing 1099, if you are a business owner, or if you have a W-2. So that should be good. Keep in mind those could change as of recording for that video. Those are basically the basic requirement that we're doing, and also those are the requirements that other owner-to-owner financing do as well for when they finance the property, the purchase for the buyer. So as I said earlier, some people might not qualify for those requirements. So that's how we would basically check it out. We will see, we would wanted to also work with them to see maybe we will find them a different property, because we have multiple investment properties that we sell owner-to-owner financing, right? So basically when we have those properties, we get those applicants, and then we check and see. Now, some of the challenges that we see with some families that have, well, they said, well, okay, I don't have the down payment. Let's just say, for example, we say it's a 20,000. Well, I don't have that 20,000, but I could have that within 2 or 3 months, and that could work with you, right? We can work with you if that's, again, that depends on the property, depends on the deal that we have at the time that you're applying for. So that's something, an option that we can help you with if that's an option. Also, let's just say if you have only a certain amount of down payment, then we might have a different property, or we might come across a different property in the future, right? And that would be good fit for you. So I will link the form, I will link the application basically, or just simple form, so you can fill it out for properties that we have, so you can check those out and also apply for those owner-to-owner financing property, right? So that's one that we have. Also, another one we have is the monthly payment, right? Some people would see, okay, I cannot afford that monthly payment, and basically we would want to see, okay, so what's your monthly income, right? So we wanted to check and see, okay, what's your monthly income, and we can compare it again to a different properties that we might have at the time, and maybe you will be fit for a different property, and we'll show it to you if it fit your criteria. If you like the area, then now we are better fit for it, right? You get the better down payment, you got the monthly payment that you can afford. That's something healthy. There is, as I talked earlier about the percentage of your monthly income compared to the monthly payment for the property. So we will check that, so we can help you with that, and we'll go over the terms, right? So you know what are those terms, so you won't be surprised, because this would be your property, right? This is like a long time, 30 years or 20 years or whatever that terms is at the time for that property. So you want to see those terms, check those terms if you agree with those terms. So we are both on the agreement for basically us as a seller and as a lender, and you as a buyer. Okay. And background check too. So we will check definitely. If we find something, we'll communicate with you and see what's going on that, and you can let us know as well, so we can definitely work with you on that. We did talk about the type of income, and that's basically we're a lot more flexible compared to the other traditional bank. So our requirement is a lot better and more flexible than, let's just say, Bank of America, Chase, Wells Fargo, right? So people who may not qualify for a loan with traditional financing, they could be very well qualify for the owner-to-owner financing. Let's just say he or she or the family do 1099 freelancer to Uber, or a business owner who don't have the return, the tax return that the traditional bank is asking for. So we can definitely help you with that. As I said, we're a lot more flexible on those requirements compared to the traditional bank. Also keep in mind that those are, as of this time, those are the requirements that we have. Those requirements are different from owner to owner on the property that they're selling as owner-to-owner finance. And now you become the owner of that owner-to-owner property without really going through a long process with a traditional bank financing, without really having the high credit score the traditional bank require. Also, without worrying about the appraisal, if that appraisal value came up high, if that appraisal value came low, and you get your loan declined. Also, you didn't have to pay for additional fees, that origination fees and other host of fees when you go for the traditional financing. So I hope that helped. Please like and subscribe to the channel. We're actually doing more videos toward owner-to-owner financing, so you would know how it works, what's the requirement, how is the process. So we will push more content toward that. So if you could please like and subscribe to the channel, it would be greatly appreciated. Also, if you're looking for more owner-to-owner financing property, click the link below or reach us sendbeltcashoffer.com. I'll have the information in the description as well, to see what properties we currently have and what are the requirements also for those properties, and maybe also on the future if you're looking for one, so we can help you with that. Again, also, if I have another video about how it works, how owner-to-owner financing works, so I will link the video also, so you can watch that as well. For right now, thank you so much. Again, my name is Waleed Yousif with Send Belt Cash Offer. Take care.